Most people believe you need a lot of money to start investing. Thousands of dollars, maybe tens of thousands. Because when we hear about investing, we often hear about huge portfolios and massive returns. But what if I told you that just $50 per week could potentially grow into hundreds of thousands of dollars, or even more over time? It might not sound like much, $50. That's the cost of a takeaway dinner, or a few coffees during the week. But when you combine consistent investing with time and compound growth, something powerful begins to happen. Small amounts can grow into surprisingly large amounts. In this video, we're going to break down why small investments can still build serious wealth, how the $50 per week investing strategy works, why consistency beats trying to time the market, and how beginners can start using this strategy. If you're new to investing, this might be one of the simplest and most effective strategies you can learn. Let's get into it. One of the biggest myths about investing is that you need a lot of money to start. Many people believe investing is only for people with high incomes, people with financial advisors, or people who already have large savings, so they delay getting started. They think, I'll start investing when I have more money. But the problem with waiting is simple. Time is one of the most powerful forces in investing. And when you delay starting, you lose valuable years that could have allowed your investments to grow. The truth is that many successful investors did not start with large amounts of money. They started small, but they started early. And more importantly, they stayed consistent. Consistency is one of the most underrated concepts in investing. People often look for the perfect stock, the perfect moment to invest, or the perfect strategy. But in reality, consistent investing often beats complicated strategies. Imagine investing $50 every week. Not just when the market feels good, not just when the news is positive, but every single week, year after year. This approach does something very important. It removes emotion from the process. You are no longer trying to guess what the market will do. You simply follow the plan. Over time, this builds momentum because each investment begins working alongside the others. Now we come to one of the most powerful ideas in investing: compounding. Compounding happens when your investment returns begin generating their own returns. In simple terms, your money starts making money, and then that money starts making even more money. At first, the growth might seem slow, but over long periods of time, it can become surprisingly powerful. This is why investors often say that time in the market is more important than timing the market. The longer your investments have to grow, the more powerful compounding becomes. Let's think about what $50 per week actually looks like. $50 per week equals about $200 per month. Over a year, that's about $2,600 invested. At first glance, that might not seem like much, but when those investments are made consistently over many years, the results can be very different from what people expect. Imagine continuing this habit for decades, not trying to predict the market, not chasing hype investments, just consistently investing small amounts. Over time, those small contributions accumulate. And when compound growth is added to the equation, the numbers can grow far larger than the original contributions. This is why long-term investing is so powerful. One of the biggest benefits of investing a fixed amount each week. is that it removes the need to make constant decisions. You no longer have to ask yourself questions like, is now a good time to invest? Should I wait for the market to drop? Should I buy more? Should I sell? Instead, the system does the thinking for you. Every week, you invest the same amount. When the market is high, your $50 buys fewer shares. When the market is low, your $50 buys more shares. Over time, this approach naturally averages out market prices, and it removes the temptation to panic during market downturns. Many beginners believe they need to wait for the perfect time to invest, but predicting market movements is extremely difficult. Even professional investors struggle to do it consistently. Markets move based on countless unpredictable factors: economic data, global events, corporate performance, interest rates, investor psychology. Trying to perfectly time all of these variables is almost impossible, which is why many long-term investors focus on consistency instead of prediction. They invest regularly and allow time to do the heavy lifting. Another important part of the $50 per week strategy is thinking long-term. Short-term market movements can be unpredictable. Prices can rise quickly and they can also fall quickly. But historically, over long periods of time, markets have tended to grow. This is why many investors focus on time horizons measured in decades, not weeks or months. When you think long-term, temporary market drops become less frightening because they are simply part of the normal cycle of investing. Beyond the numbers, there is another powerful benefit to investing regularly. It builds a financial habit. When investing becomes part of your weekly routine, it stops feeling like a big decision. It simply becomes something you do, just like paying a bill or putting money into savings. Over time, this habit can quietly transform your financial future, because consistency in financial habits often leads to long-term wealth. One interesting thing about investing is that the most effective strategies are often the simplest. Simple strategies are easier to follow, they are easier to stick with, and they are less likely to be disrupted by emotional decisions. The $50 per week investing strategy is powerful because it is simple. It doesn't require complicated analysis, it doesn't require constant market monitoring, and it doesn't rely on predicting the future. Instead, it relies on consistency, discipline, and time. Many people believe that building wealth through investing requires huge amounts of money, but the truth is that wealth often begins with small, consistent actions. Investing $50 per week may not feel dramatic, but over time, those small investments can add up, especially when they are combined with patience and compound growth. The key idea is simple. Start early, stay consistent, think long-term. Because in investing, the habits you build today can shape your financial future decades from now. If you found this video helpful, consider subscribing. On this channel, we break down simple investing ideas designed to help beginners understand money and build long-term wealth. Thanks for watching, and I'll see you in the next video.